morning and Happy New Year, everyone. I hope everyone had a good holiday and are staying safe and healthy. Today I wanted to recap briefly 2021 for you, and more importantly, give you some perspective on our thoughts for 2022. Now, think back for a second where our economy was 1 year ago. We had just had vaccines approved. We were mostly still shut down as an economy, and we were all anxious to start traveling again. Doesn't it seem longer than a year ago about that? But what really happened in 2021 was our economy reopened. The majority of Americans were vaccinated, and Americans started spending to make up for 2020 when they were mostly stuck at home. Now, what did this do? This caused the markets to have a great year, especially here in the US stock market, being up over 20%. US stocks outperformed international stocks as China's economy started slowing down, and Europe really was hit harder with COVID and more restrictions the last half of the year. Now, we expected to have a good year, right, with this great reopening, but we didn't expect the markets to have such strong returns with little volatility. The reopening, though, had many challenges, especially for businesses over the last year, such as our supply chain issues, inflation, and more importantly, trying to hire employees. The markets, though, they mostly shredded this off and provided investors with a great year with little volatility. As we look forward to 2022, though, we continue to be optimistic, but moderation is going to be my theme going into 2022. Our economy is going to start transitioning back to more of a typical economic environment versus the large growth we've really experienced since the COVID downturn almost 2 years ago. Now, the last few years, we've become accustomed to large market gains with little volatility. But on many of our calls right now with managers, economists all over the country, they're discussing market downs and ups to occur like we normally experience as they see our economic growth slowing. They see corporate earnings to be lower. They see inflation to start rising and the Fed to raise interest rates probably 1 to 3 times this year. Now, this might seem ominous to some, but compared to 2021, this is just getting back to more normal and sustainable levels. Now, we certainly don't know what will happen with COVID, but the markets are expecting the worst of the pandemic is behind us. Why is this? Well, this is why COVID cases are spiking, all-time highs, but the markets don't expect these outbreaks to truly impact our economic growth. One key feature of our economy right now is consumers are spending more towards goods and away from services. Think of instead of going to restaurants, what do? They bought Pelotons. This has created supply chain issues, upward pressure on prices, and inflation as you see high demand and little inventory for items such as cars and other goods. Now, the markets are expecting inflation to be elevated in the near term, but really start declining later in the year as we work through these issues. So in summary, in 2022, investors can expect volatility to return to more normal levels, but more potential market gains, just more moderate, and not what we've experienced since the COVID downturn. We're going to continue to keep you updated as we always do every month. I'm Ryan Niedert, CEO here at Oakcrest, and Happy New Year.